I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, I can't take no loss.
Hi, and welcome back to The Conscious Day Trader. I am Yanis, and today, as promised, Saturday, I'm going to show you the trades from yesterday. Today, as in yesterday, was the only Euro USD trade that we did in the pound. And the reason I did a Euro USD, one, it was a very clean setup on the ICT 2022 mentorship concept after the Asian close, so the pre-market of the London Open. And we're going to see that. We're going to see how we correlated that with the USD index. But also the pound dollar had some news, and I try to avoid news just because the ICT concept is all about the algorithm taking out liquidity. And when news comes in, that can reposition the trades. And a lot of the times it does go into where you think the liquidity is going to be taken out, but the volatility it just brings another aspect to your trading and makes it a little bit harder to trade. So I try and stay out of the pairs that have news. So we're going to jump onto the trade. But before we do so, make sure you like and subscribe to this channel. We are growing the community, and I'm super thankful to everyone that's following this journey. And hopefully you're learning as much as I am doing these trades. So this is everyone asked about this. This is Trade Sync. This is where I take my journal. And you saw this in my previous trade. We're going to analyze the 10th, which was Friday. The trade happened around 6:30 a.m. UK time, 7:30 my Central Eastern time. We had a good week. We had $2,829 in profit. And just for the skeptics out there, I'm just going to show you the MT5. This is on the Fivers account. So I'm trading so this one here, 160,000. The balance is 53 because when they open a new account, they give you the 150. I haven't taken any profits out yet. So this is the 10K from the previous trades, but obviously I only get 75% of the split because until I hit, I think it's about 400,000 or 500,000 account, then I get 100% of the profits. I might be wrong on this. Let me know in the comments. I'll check it also. But for now, I'm getting 75% split on any profit that I make on this account. But it's still very good. And it's definitely going to be paying my bills and my lifestyle in Bali. So let's jump onto the trading view. And we're going to go straight into the index. And I'm going to show you exactly my entry, how I analyze. Someone said, can you show me how you make bias? How do you create bias for the day? So I'm going to show you that today. Also, someone said, can you do it process by, step by step on how did you find the trade? And I'll try and do that as well today. So you can, when you open the charts, what would you do? Step by step in order to find this setup that I had. So in order to do that, we're going to go back to Friday we're going to check here if we're on London. Yeah. So we're going to go back to the trade. This is the New York session, and this is 6:56 UK time. And this is what information we had. Okay. So I'll tell you what, we're going to take everything off. Let's remove. Like I'm seeing the chart new, so then you can follow it. So what does your eye go to straight away now we're 6 o'clock a.m. In the UK, so it's pre-market, and the market has gapped. I've given it away. The market has gapped up on the dollar. So on these this is the 2 minute. So if we go on the 15 minute, it will look like this. You can still see the gap down here, but this gives you it gives you that. Actually, I was watching it on the 1 minute, and that's when I draw the gap. So what does the market tend to do, especially on small gaps like this? This is only a gap of 26 pips. Normally the price will want to come and fill that gap, and it's in 2023, every time I've seen this set up, I've always longed the pair. So if I was trading the pound, I would be longing the pound. But however, we said we had news on the pound, so I didn't do that. In terms of the euro dollar, I was looking for a long setup in the euro dollar. So what we're going to do is straight away, before we put any dailies, we just want to mark up this area. And this area here, we're going to put the magnet so we can hone in into the actual gap. Now I'm going to draw the gap from here to here, but the actual gap of the open is from here to here. The reason I am discounting this is because it's already filled. So like if I draw this and then put it across, up to this point here, up to this level, you can see the price has filled, right? So this is from 13215 to 13194. There has no candle. So that is the area that needs to be filled. So, and for that reason, I pull it across to the current time, and then I change that to call it the gap. I normally tend to have it as a blue line, a blue box. So then I see, is it worth it? Is it far away that can give me a setup to come into this trade? So for the index to drop into that gap from the price at 6:55 UK time, it's 100 pips. So plenty of room on the dollar index to get a move on that. And that's what I saw. So now when I've marked this, the next step is to go and put my daily high and my daily low. So I'm going to jump on the daily. And we're going to go to the previous candle. So now this is going to include the Friday. So we were trading this Friday, so we would have the information from the Thursday. And I like using the horizontal ray. That is going to be my daily low. And the daily low is because of the wick, the lowest price that the price went to on Thursday. And then the daily high. Remember, this is all on the index, even though we're not trading the index. We're trying to see what conditions are showing up in terms of on the dollar itself. Now, why have I put the fib there? The only reason, you can use any tool you want. You just want to find the midpoint of the high of the previous day and the low of the previous day, and that's where we're going to put the equilibrium. So I just change that and put my equilibrium in, and that is my daily high and daily low. So you see how quickly this can be done. This is without seeing any bigger picture or anything. We just identified the gap, then we jumped on the daily and we found the daily high and the previous daily low and equilibrium. This is probably, I don't know how long we've been going on this video, but less than 5 minutes, you can set up this every morning. So now we've got everything in. I just want to see quickly on the daily, what is the picture of the dollar? Okay, so we can see we've been selling off on a big move. And for the Fibonacci people out there, if you take this low here and extend it over, we can see it came all the way down, and now it's hovering around the 23.6. So in terms of Fibonacci, you would want to see a break above the 23 for it to move all the way to the golden zone, which is the 38.2 to the 61.8, but the actual golden zone, which is the 50 to 61. What can happen in a fib? You can always you see now it's holding below, and actually the previous day closed below the 23. So until the 23 is broken on the upper side, this can show indications that it can be coming down. Now, the gap that we wanted to see was the price coming down. So that is actually adding to our idea that the dollar might be going down, especially in the open of the session. Now, if the dollar's going down, that means that it's good news for the euro, because the euro will be stronger, the euro will be going up. And now what we want to do, if we take this, so what you can do, if you like clean charts, you can leave it like this. But if you want, you can start adding sort of your, and Scruffy Trader does this extremely well. He would add boxes around this area here, take out the magnet. So you have he will highlight the golden eye, and if you want to learn more about that, go and check his YouTube out, and he has a Discord as well. But even if you want to add lines in terms of targets, so that's your 50, 50 on the daily, and then you know where you are in terms of the price action. One more thing I'm going to give you on the fib. So as in terms of price action and ICT style of tape reading, what's happened here? We've had a high, came down, created a lower high. So if you want a trend line from that move there, you can see how it's creating lower highs, and then the break. Okay. So in terms of, if you were trading the index, would there be an opportunity to get in here? Let's see. If you go on to the 4 hour, this is not very relevant to my trade, but I think it's a good practice to see if we would have found a fair value gap to enter in this break here. This is the break, and you can see it still hasn't recovered into this fair value gap here. So that would be the actual fair value gap. And why this one and not these? Because look, here is created a pretty much equal lows. And this is the most evident move crashing down. So you wouldn't get into that. And then you would have to wait to get in this area here. This is probably where you would get your entry on that fair value gap there. It broke lower. This came down, closed red, came down, created this swing low, lower low, came back up, filled the fair value gap there, and that would have been your entry, and you could have traded it really nicely. Yes, it came back down, filled this fair value gap here, and this is quite clean ICT entries, and then came down, rejected, came down, then consolidated for a bit, created a higher high. And here, this could have been, this is where people get confused. And they're like, okay, so we've got a change of sentiment or change of character, I think ICT calls it. So we've had this equal highs here, right? Exact equals highs here, exact equals high here, and we had a break above. Now, you could say, I'm gonna wait for this retracement from here to this fair value gap to go long, right? And then you get stopped out, and you'll be thinking, why? Why is this happening? This looks like it's on the 4 hour, really good setup on the long side. Why is it not happening? What would stop you from going long here? One, we've been heavily coming down, and it's the first consolidation. Two, it failed to break these highs here. So the first question would be, is this taking out buy side liquidity from these highs here, equal highs, taking out liquidity around this area? So for me, if I wanted to long this, I would want to see taking out liquidity out of this and a strong break of this high here. So this would be your buy side liquidity. And also you have buy side liquidity setting above here. What also you got here is that fair value gap. So nice areas where you would want to see confirmations. This has been very heavy. The dollar's been dropping heavily. So for you to go against that trend, you would want to see multiple previously swing highs being broken, but then not coming down and breaking a low. So if you wanted to go long here, let's see. Let's say you did your analysis wrong and you saw this an opportunity to get in, and you got in at this fair value gap here. And I'll make it cleaner for you so you can see. So let's say we took out buy side liquidity, failed to come down, breaks even higher. So this is, you're like, okay, this is looking good. Comes back in, and then it fills you in on that red line. How many pips would it take to break the low of this? On the low of this break, if you took this break, it would be 50 pips. So you would have to manage this trade for a 50 pips coming down against you. So let's see, if I had traded this, would I be able to get out of this? So on the hour, we would see that there wasn't a lot of opportunity for me to get out of this. So I would have been stopped out for 50 pips. That would have been, I get confused with my lot size. I think it's like $500. So maybe I would have kept it, because as you know, the way I manage my trade, I do it by days. And if we go back on the calendar, I want to risk 4 working days. So that would be roughly $2,000 and maybe a bit more. If I'm extremely confident about a setup, we're looking at a 2,500 day loss. But as you can see, that doesn't happen very often. So even if I get a hit, I can recover that, and I will take a bit less profit on that month. So that's the way I trade, and that's the way how I manage. It's not ICT. ICT will say take your stop loss. You know, if you were getting in here, trying to get here, below this swing here would be a nice indication that you're wrong, because it would have broken the lows here, and you're looking at 20 pips. That might be still quite a lot for you. So you would have to sort of set up your stop on like let's see, 3 pips or something like that. So you would be taken out quite quickly without a big loss. And that might be the way that you want to trade. Similar to this, if you look at this, we're talking about this fair value gap here. But if you got in on this break and this fair value gap got filled here, or this one, then this is why I give a little bit of room the way I trade. Because if you look at 3 pip stops, and this would have been 68 pips, and this would have been 35 pips. So you would be stopped out on both of these trades if you were going short, unless you got in here. Obviously it didn't come down, so you would get triggered and get your you would have get a profit of 160 pips. So both things work. So if you had got in here, stopped out for 3 pips, you went in here and then got your 150, that would have been a perfect trade on the long side against the bias. But as we discussed, we're going to go back to the trade now. I've digressed because of some comments that I think are useful in terms of bias. How do you create bias? So we're going to go back to the euro. Let's go back to the current time and what we saw. Just to recap, we put our daily, we looked at the bigger picture and we saw that it was short. It wasn't breaking above the 23, and we've got a gap below. So I am pretty confident that this price at least will come back to equilibrium, to reprice, get discounted value, to either go back to retest on that daily the 23%. So, and before we jump on the euro, let's see what happened. And it did come and did exactly what we discussed. So it came back down, filled that fair value gap. I was out of the trade around this time, and it continued all the way to equilibrium. And you know, that looks like a small move, but we're on the 15-minute. From the tops here to here, that is 35 pips. So you can get really good profits, depending on your lot sizes and your targets around that area. So let's jump onto the euro now. And we're going to take everything out. Okay, and here we are. So let's, what we're going to also do, add in the markets, because we deleted everything. We're going to go to market, FX market sessions, and that will give me everything that we're looking for. Where is the previous line of sessions? But most importantly, it would give me the Tokyo kill zone, which I look at. And also, if you want, you can put the whole Tokyo session. But I know, because I've got my London Open, around the pre-market of the London Open is the close of the Tokyo session. So I don't need to have too much on my graphs. And we saw this move. We saw a break below the Tokyo session. So just before we do this, one more thing. Let's see, during the London Open, 7 o'clock, we had that breakdown that we discussed about filling the gap. However, the price, if we go onto the 5 minute, if I remember correctly, it went up first, filled this fair value gaps here, and then went down. So that gave me even better price. I wanted this to go as high as possible, but then I really wanted not to miss the move getting into the gap. At least here, I didn't expect it to go that low, at least here, so I can get paid for the day. So let's see what time that was. So exactly at 7, we had a little bit of a spike up and then came down. So let's go on to the euro, and we're going to do exactly what we did. We're going to repeat the process. We're going to put our daily high from Thursday. Daily high, and you get used to this. You become quite quick on getting these in, and the daily low. So, and what else is missing? The equilibrium. Put the equilibrium in, get a horizontal line, put that in, and change that to equilibrium. Okay, we're ready. We're ready on the euro. Like I said, I was looking also at the pound dollar, but because of the news, I didn't touch it, especially when I saw the gap and I saw the clean setup on the euro, which we're going to talk about now. ICT setup, I was confident that this was coming down. Now, I wanted to go long on the euro. What's clearly evident that the euro, where is the euro currently priced now? This is on the daily. So you can see on the daily that we have a fair value gap here, that the price has come back down into and filled. This is on a daily fair value gap, so on the higher time frame. That's one indication. Now, if the price continues lower and we're wrong, where's the worst case scenario? Where would be the next target on the daily? The price will want to take out sell side liquidity. Where is sell side liquidity sitting? Below these lows here. So what I'm doing here is seeing, are there any direct equal lows that the price has reacted to? So there's not much exact equal lows apart from this one. So I'm going to drag that. You see how that has touched that low there? And yes, ICT doesn't talk about this, but these are processes that, we all do our own little differences. But what ICT will definitely say is that this area here is sell side liquidity. And the price, if it breaks lower below this fair value gap, that is the next target. So that will be your sell side liquidity. Then I want to see, how far is this? Is this something that a daily candle can do? Look at these big daily candles. How big are these big daily candles? So from that to that, we have 141 pips. Let's take that out. So this one here, for it to go all the way down here, 184. So it would be on the extreme side of a big candle. So that gives me an indication that before that happens, the price probably gets retested, come back to equilibrium, and then slowly breaks down, unless we have big news that can move the market like that. So that gives me, if the price was down here, then this would be more likely to happen in the day, because we would be on like a 50 pip range, and that would have been easily done on the euro dollar. So I would be more wary about the price coming down here and my idea not being correct. And this is how you create bias, guys. It's not as easy as, you see this candle, right, is red. What is that going to do? You have to paint the picture in multiple areas. So we've got the dollar index idea, which feeds into the euro dollar idea, and you're constantly building and building onto your what you think is going to happen. Okay, so what we're going to do now, that is the Thursday 9th. Perfect. So we're going to drill down onto the 50 minute. We can see, and we're going to go back into our trading time, which was 7 o'clock. I'm going to take that out. So now we've marked everything up. And remember, we want to go long on the euro dollar. So what do we want to see? We want to see price coming down. Is that a possibility? What has happened in the 15-minute? So let's do a bit of price action here. This is when I've looked at 6:30. We're getting ready for the kill zone. So the price has created this high, pushed down, failed to come below this sell side liquidity. Yeah, it took out the stops here. So tapped into this area. People that have been long here, where would they trail their stop? They would trail it below these lows. What is it? Sell side liquidity. Gets taken out. What is also here? A fair value gap. Start painting the picture. Put that in grey like we normally do. So fair value gap filled, pushed higher, came back down. Why would you start doing this from back here? Because you get in tune with what the price action is doing. This is from the Tuesday of the week. So you're getting an idea of what the price has done, and you're not just jumping straight into this price and saying, okay, this is broken here. How do I know? Is this taking buy side liquidity and crashing down? Or is it continuing up to equilibrium? That's what the previous information is going to give you that. So as we discussed, it came back into this. Is the big gray area is the daily fair value gap. So it break down, filled the intermediate sort of fair value gap on the 15-minute. This is New York session. Let's add the New York session in. Takes a second. There's the New York session. Came up, pushed higher, filled this fair value gap into very nice ICT fashion. Filled that fair value gap there. Above the 50% of that candle, let's see, out of interest. Now in terms of the fair value gap, it came above the 50% of the fair value gap. It's interesting to just start seeing this, because if this happens again and you see the candle being around 50% and it's not pushing lower, you might get an extra indication that this is actually a fair value gap fill before it continues onto the upper side. And then comes up, creates this fair value gap, gets filled, breaks the highs of this, comes back, and then pushes the price up. Tokyo is continuing this story, and then we had a strong push up onto the London session. This is now Wednesday. We had the price come back down. This is the only fair value gap that there. Touched it, continued up, took out these highs, but failed to take the New York highs. All right, so we came back down. Let's put that as a fair value gap. The more you do this, the more familiar you get with it, and it becomes second nature. You don't even need to put the drawings in. You can quickly see this and be like, yeah, that's a fair value gap fill. Failed to break these highs. What rests above here? Sell side liquidity. Buy side liquidity. And then comes down. Breaks below what rests here. Equals. So now here we have sell side liquidity. Below this wick, equal lows, breaks down, comes all the way down, fills this fair value gap. You don't need to be extreme like me, going all the way back, but this is good. You're almost like back testing what's going to happen today. You're constantly building that picture. Filled the fair value gap, pushed up, then failed to break here, came back down, failed to break these lows. Now what's happening here? We've got the price is contained within this high and this high. So it came down, failed to break the lows, came up, failed to break the highs to go back into this day's equilibrium. We're now on the 8th. Coming down, broke the lows, but failed to break these lows. Came back up, filled this fair value gap, continuing down. So what am I seeing here? I am seeing a heavy price continuing to the downside. We started from here, we created lower lows, came down, broke the lows here, filled the fair value gap, came down, filled the fair value gap. that would be this fair value gap here. And I came down, pushed back up, not much fair value gaps here, came down and consolidated around the daily fair value gap, which has created the previous daily low. Then price came up during the Tokyo session. Yeah, so where are we now? On the 9th, Thursday. Pushed up, all the way up, and now what's happened here? Going down in the time frames because we're getting closer to our London Open. And I like being on the 1 minute. So let's add some candles. All right, so we had a continuation onto the upper side, and you can do this. I'm not going to do all of this move, but you can continue this tape reading all the way through onto where we are currently now. So look how nicely this shows you now what's happening. And if you want, you can turn off and on the tree, the sessions. This looks pretty clean. You can understand it. You can see that spike. You can see that fair value gap filled, push up, failed to break highs, then reversed, came down, took out. What did it take out here? Below this low, sell side liquidity. What's resting at the sell side liquidity is the top of the previous daily low, which we know now it's Thursdays, and also the top end of the fair value gap. Consolidated and broke higher. We're coming into Thursday session. Thursday session broke higher. We had this break. What would you be looking here? There's a fair value gap there. It's taken out this buy side liquidity. I'm going to keep doing it. Get boring. It has to become boring. When it becomes boring, you know that you're seeing it multiple times and you're starting to understand price action. What happens when we get, when it fills, this is not fair value gap, that would be buy side liquidity. Failed to break down. Where is it going next? To create the high. So it creates the high, comes down, changes we had a strong break below, filled this fair value gap here. You could argue that there's a fair value gap there. It never came up. So that would have been your entry. Comes down. Let's see. Now what's happened here? Can you see it? We had a move from here all the way up. Break of structure. Refilled this fair value gap here. Continued on the lower side. Came down, fails to break all the highs. Let me move this so you can see. What's it done here? Stopped at this fair value gap here. Look at that, to the pip. So that fair value gap now has been filled. What can happen next? Where are we close to? We're close to the previous daily low. If it doesn't go to the previous daily low, why would it go down here? Because we've got now this sell side liquidity that got taken out here has moved below this now. So you have sell side below the previous daily low, but also you've got sell side below these equal lows here. I can't remember what's happened. I'm just doing this live now. Okay, it's gone back up into equilibrium. Where did it stop on the equilibrium? What do you see here? A fair value gap. Start training your eyes for this. Yeah? Because the more you see this, then when you don't have the information of these candles and you see this, and you'll be like, okay, we've been on a downtrend from this high here, filled the fair value gap, so it had a reaction, filled this fair value gap, and it's continued lower. Where did it stop? It stopped taking out this sell side liquidity. What is potentially going to happen now? It's either going to come down here or fill a fair value gap up to continue lower. Breaks the lows, takes sell side liquidity. What am I thinking here? Where are we at? We're in the fair value gap. The fair value gap can fill all the way. So if you're trading around here, next target can be below these. So we've got sell side there, which it can come down. If it doesn't do that, well, it's taken out sell side liquidity. If this is the low, the new low, and it's going back up, what would you want to see? You would want to see a strong break above this high. So you just wait and see what the price is going to do. It's holding below. Fill the fair value gap straight into that sell side liquidity. Okay, and this is now current price. So this is, I think is a good exercise for you to do, because you start seeing how price reacts. And what we're going to do now is show you the actual trade, because we traded this. What did I trade? And let's take the price back into the time we were looking, 6:45. So we had the break below the Tokyo session. And we are low on the sell side liquidity. We created sell side liquidity and we're close to the previous daily low. So I'm quite happy. I want to see now an indication that we're a setup, an ICT setup of a break higher that would give me a fair value gap, and a fair value gap that's going to push higher. Let's see if we got that. Right, so we're on the minute. And we had this break higher here, 7 o'clock. Where did I get in? And go to our history, 158, so 107,202. All right, so I got in after this break. That's why I said early bird catches the move. So we see we had this break above this buy side liquidity here. Now, why we had done the analysis on the index that we discussed. So I'm looking for a long opportunity. Why did I not get in on this move? Let's see what time that was, 5:25. I was sleeping. But what I'm going to say is, can you see the difference of this move breaking above? And you've got the equal highs here, and it's just taken out those equal highs and pushed down. There's a difference between these candles, green candles, breaking. And remember, these are 1 minute, breaking aggressively and taking out liquidity and filling fair value gaps on this side, and then created an equal high here and comes back down. So now I want to get in. I'm interested. So at this area here, with all my analysis, with my bias that we've talked and breakdown, and hopefully that is more clear now, we are looking for an opportunity to go long. What do we wait for? Comes down, comes down. Can I see any fair value gaps here? None really clean fair value gaps, which means I was on a higher time frame. What about the 2? The 2 looks like we have a few fair value gaps. What about the 3? This fair value gap here. Let's see. I want to show you which trade I closed, because this is probably my first close. So 26161. Okay. So why did I enter there? If you've done what we talked about analyzing the charts, we had a break of structure. And then if we go on to the 1 minute. So we have that price here. And as you can see, we had a break higher. And then we had a fair value gap. One there. I'll show you, take out the replay. And we're going to go into the 7. Let's go 6:59. So we had a break here, and this was the area where we saw the fair value gap form. Okay. Now I didn't get the great fill. I filled in on this fair value gap, and I wanted to get in this, and the price pushed down, and I got in at this price. Then the price came down and spiked down and filled these fair value gaps here. Okay, so you can see this, and you can see that this is a fair value gap on a higher time frame, because there's a lot on the lower time frame. So the higher up you're going to go, you're going to see it cleaner, and you can see it there. So we had a fair value gap there into the open of the London session. That pushed down, spiked down, and I was pressing the buy signal because I really want to get into this setup. Looks very clean. Break above, comes back down, fair value gap filled. We had the gap on the dollar index, so that was confirming. So I was in here, really good price, super happy with this price. Now I want to get out of this trade. As soon as my price came up here, I closed it, and that's why I closed it for $4. You see 6 trades, but now I've got 1 trade. Now, when the price came back up and filled this fair value gap, I re-entered in a worse price than this one. Why? Because if the price comes all the way down and breaks these lows, my idea is wrong. So I don't expect it to come back further down. But by taking this trade out, I've decreased my risk, and now I'm waiting to see a confirmation. So the confirmation happened, filled this fair value gap, and re-entered. So I got in a worse position, but I know that this, if comes down, I'll be out of that trade. And eventually it went all the way and filled up, touched the equilibrium. I closed before 8 o'clock, so up to the equilibrium, I took my trades out. And yes, I did some more. I think I did how many repositions? So I closed 14 pips, 2 repositions. So I re-entered as the move was happening. And what that means, that's where people get confused in my management. This went up to $154, took it out, closed it. Because I'm anticipating a fair value gap getting filled. Then I think I closed 2 positions for 300, closed my bad positions when they were at $4 and $3 or whatever, and then traded it all the way up to equilibrium. And a bit of a long video, but I think it's really useful. And you can see that we started the analysis of the euro from Tuesday, and we did a tape reading just to summarize what we did. And that takes practice. I used to be a performance data analyst for Elite Sport, so seeing patterns is very familiar to me, and I have an analytical mindset, so I start seeing this. If this felt difficult, I would say go on any chart and put in a London Open and just start doing this on the previous session. Start from the Tokyo session. What do you predict the price doing? Then you've got so many videos from 2023 and 2022 from ICT showing you how he does tape rating. And now you have some videos of me trying to do it. And yes, not everyone, you won't be able to do it exactly how I do it, because I see the market differently than you see, and you will see things that I've missed. And I've probably missed a few things here that you can see. And that's okay. I can take a trade, and you can take a trade later on in the day or previously in the day, and we both make money. Don't have to be. There's no one correct way of doing things. It's just your way, a way that works for you and your psychology and for your trading. Stop loss is the same. If you can't manage the trade that I manage it, I'm not asking you to. I'm just sharing my journey. Okay, so if you don't understand how I'm managing my trade, that's okay. I'm not expecting you to understand my trading management that I've been evolving and making better and adjusting it to myself from mentors like ICT and the Scruffy Trader. I've developed this that works with my psychology and my setup. Now, if you're new to this and you see 10 trades, you'll be like, wow, this guy has extreme high risk. But as you can see, and I hope you can see it through the videos, I am decreasing risk with every trade I'm closing. And I have my max loss, so I'm not going to lose huge amounts of that's going to kill the account. I wouldn't let that happen. And that's the way that I trade. And I hope that's helpful. I hope you can see sort of the 2022 mentorship examples on the current price, literally yesterday, on how it worked out on the euro dollar using the dollar index. And make sure you like and subscribe to this video channel. And we'll see you. The last trading day that I'm going to do is Monday, and then we're off to Bali. And I'll hopefully bring the journey on in the videos from there. Have a good one, and see you Monday.
I can't take no loss. I don't even know what it costs.